Hey everybody, before we dive into today's episode of the AgView Pitch, I want to invite you to check out our exclusive podcast, 19 Minutes. For just $30 a month, you'll have access to high-level business insights and new episodes that are released on the 9th, the 19th, and the 29th of each month. Topics include finance, cost of production, team health, taxes, collaboration, and much more. With 77 episodes already available, signing up gives you immediate access to all past and future content. Click on the link in the show notes and subscribe and start boosting your bottom line today.
Hello, welcome this afternoon to another episode of the AgView Pitch. We are going into a new marketing week for the week of February 23rd. I am joined by Greg McBride, Director of Brokerage from Allendale. What's going on, Greg? How you doing?
I'm doing great, Jeremy. How are you?
Hey, I can't complain. It feels like we've got somewhat of a heat wave going on today. We're breaking the 20s, up here in northern Illinois.
Oh yeah, it's been a little shock to the system. We actually saw some winter.
Yeah. I've talked to a couple of people all over, the kind of the whole, central states, maybe what you would say flyover states. And it seems like we've all been, a little shocked by some of this cold. Winter did show up this year so far. So, yeah. But anyway,
Yep, absolutely.
So, in our area, we needed it. We needed a little bit of snow cover. We always think that up by us, this, gradual snow melt always does wonders for our crops, versus, heavy rains and having it wash off. So we'll take it. I think we'll take it. That's for sure.
Right.
So let's shift from, I guess, our cold weather. I want to get through a few things here on this next marketing week coming up. So I guess maybe let's start with corn. What's the outlook on corn? What's your thoughts around that?
Well, we're still friendly on the corn market. You look at exports, and exports have been phenomenal. We are exceeding what the USDA has down for a for an all year goal. The question that kind of surrounds the corn, even though it is friendly, is how much risk do you have to price in for tariffs and whatnot? We already know that Brazil is cheaper than we are for at least the short term over the next 3 or so months. But we're still seeing good sales. Like even the sales for last week I think they were 1.45 million tons, which is the second largest for that particular week. We just continue to sell. And I wouldn't be surprised if on maybe the March or even the April WASDE report that the USDA comes in and adjusts export demand by 50 to 150 million bushels, which, I mean, that sounds great. But at the same time, how much do they have to associate some risk on maybe some cancellations, maybe some some switching, something like that, or at the same time, do we now have a couple of weeks of kind of off ethanol numbers? Does that kind of pull us back? So as far as what we're looking at, we're at what we would consider fair value based on the risk. So, take a little bit of action here, do some work on the old crop, but overall, I mean, it's still a friendly market. So, you got to at this time of the year, you got to sell into those kind of rallies.
Yeah, and I 100% agree. The one thing that I would just say, I've talked to quite a few producers here recently. And maybe you can elaborate what you think is maybe the biggest risk we face as we are right now, because you're absolutely right. We're getting friendly. I've looked at a couple cash bids around here. We're starting to get close to break even. And it maybe showing a little bit of profitability. But I still see for those that maybe don't want to lock in braces or do some HTAs or something like that. There is, to me, with what I would say, what corn is showing as far as profitability versus beans, it seems to me that some of the risk out there is that by the time fall rolls around, that we could see a pretty wide basis if everybody moves if everybody moves where the economics are telling us where to go.
Yeah, I mean you get a lot of people that will watch the corn bean ratio, and it leans to the corn side, and it has for a while. Beans being so far under the cost of production, it does lead us down the road of higher acres, and that's you talk about where your risk lies. Well, with the old crop, it may not have anything to do with the old crop that's in the bin or sitting at the elevator or wherever. It could be that all eyes start to focus on how big that new crop could be. That March 31st report is a big one for kind of setting the tone for the next 3 to 6 months. And if they come in and they raise it by 3 million acres, and we're at 93-ish million acres, with a trendline yield at 182, and I mean, can we get there? Probably, but even if you're close, you're talking about a 2 billion carry out on new crop. Well, in May, when you get that first new crop number, if it's at 2 billion or above, that becomes the feature becomes the thing that everybody fixates on. It doesn't matter necessarily about what's going on with the old crop. You could see the new crop lead the old crop back down in at least the short term on
Yeah.
that kind of a number.
Yeah, and I guess this is maybe just a plug, from my banker side of things, in my eyes. But I would say, there's if you look at even the cash bids on old crop right now, there's reasons to sell, there's reasons to deliver, there's reasons to put this marketing year behind you and start looking to the future, I think. What's your thoughts
Sure.
on that?
Yeah, absolutely. And the thing you have to look at is, we didn't get this opportunity last year. When we were planting this crop, the best we did was like 498 and a half or 498 and three quarters in May. Well, you're planting that crop, and you're scattered because you're trying to plant corn and beans all at the same time. You're not necessarily paying attention to your marketing at that point in the year. Plus, at the time, you didn't know what you were going to have anyway. We've
Right.
gotten a really nice move off of very good demand. We've seen the USDA come in and adjust yield. They've come in and adjust overall ending stocks. I mean, we went for like 6 months straight where they were lowering the ending stocks, and they capped it off in January with a big cut. And that's a kind of a counter seasonal move that we don't normally get. So you've got to take advantage of it. When you have big carryout years, you don't see a huge variance when it comes to your basis. So to expect basis to really tighten in from here doesn't necessarily mean that it's going to happen. It might. It might tighten in a little bit, but we're not talking about going to a positive basis anytime soon. Even if you were to take off, 100 150 million bushels from our ending stocks in March, April, May, whatever it is, you're still talking about a 1.4 billion carryout. Well, last year's crop was what, a 1.2 billion carryout, 1.3, and we were still on our way down from 2021 and 22. So we've got to be very careful about getting too bullish up here, and take action, and just say, like you said, put it in your rear view and just say, okay, good enough. I got back. I mean, what did we get back? Over $1 from the lows that we posted
Yeah,
last
pretty
fall.
darn close.
I
Yeah.
mean, it's not often at this time of the year that you're getting that dollar back. The beans sure haven't done it. They've gotten $1, but that dollar was from being $2 or $3 under your cost of production.
Yeah, and instead of
So
yeah, yeah,
yeah, you're
yeah,
getting back to close to break even or even just slightly profitable at this point.
yeah. So I guess as we wrap up porn, I'll put my farmer hat on instead of my banker hat. And I guess, no trade recommendation here, but maybe just, philosophical. Does it make more sense to, you know, um, get some form of HTA or futures contract out there, take a bet on the basis, or does it make more sense to try to lock in your basis and see where we go on the price side of things?
I think at this point I would be locking in some cash. I mean, if you really are bullish, take a little bit of less of a risk and look at a call or something like that. Re-own it on paper because that paper is going to be less risk than let's say we do get led around by the new crop. That new crop number being, let's throw out a crazy number of 95 or 96 million acres. Well, that's going to break things. What if
Yeah.
what if over the next 2 months, 3 months, we drop off another 60 cents? What really starts to bring that new crop or that old crop back to where we're at now? And who's to say that the basis doesn't widen out because they know you're up against the wall. You've got to start clearing the bins as you go into the summer so you can make room for what you just planted.
Yeah.
So this is that bird in the hand type situation. You've had a good move. Take advantage of it and then look at, alternative way to own it. Can we own it with some calls? Do we want to look out further and maybe sell some calls, maybe collect some premium way up above the market? But there's risk every which way you look at it. Just try and minimize your risk. The biggest risk you have is in those silver cylinders out there.
Yeah. Yeah. Absolutely. All right, well let's move on from corn. Let's talk about everybody's favorite right now. We got soybeans. It is everybody's favorite topic right now. What's your outlook, or what do you got going on for this marketing week with soybeans?
I will start with I'm not as bearish as I was a month and a half ago. I
Yeah,
was
yeah,
and I was ragingly bearish at that point. I mean, up until we got that USDA report in January, you could have taken this thing down to 950. Well, we were there, but you could have taken it down to 850 in my opinion. The risk that we had associated with tariffs, which is still valid, all of that. But until they cut those yield numbers, until they pulled us back a little bit on some of some of the export demand that we had at the time, the crush is still doing very well. I thought we could have easily, with the tariff situation, taken us down below $9, and it would have been at that point it would have been an easy buy, but it also would have been how long does it stay there?
yeah,
We've been through this. 18 and 19 was a rough year and a half while we dealt with the first trade war. So there is still that threat out there. I think you're undervalued, but I don't think there's any reason to look for us to do what we've done in the corn, which is get you back to almost a break even type point. I think there's limits to what we see. You're still dealing with a big carryout. 380 million bushels for old crop carryout is it's rough. It's not burdensome like we were looking at before, where we were 540,
yeah,
450, all those kind of numbers. But it's certainly not the tight numbers that we generally like to see when we're looking at 13, 14, $15 beans, which is like 200 million in carryout. So 380, your roughly fair value or your economic value puts you at about 11, maybe 1160, and then you price in no, I think it's 1130 actually. So you price in a little bit of that risk and you put us back to 1050. Well, that's where we're at. So
yeah.
we're fairly priced. I think it's underpriced, but I mean everybody's going to look at it as underpriced compared to where we were at a year ago at this time.
Yeah.
So
Well, and I've heard a lot of times there's two different weather markets for soybeans. There's a weather market, with U.S. crop production, and there's a weather market with South American crop production.
yeah.
Do we have some potential yet to still trade a weather market in Argentina? I know they're talking about heat, maybe potentially some dry weather back, behind some of this heat coming in Argentina at this point.
Yeah.
What's your thoughts on that? Can we still get some weather pricing in on this crop down south or not?
Yeah, we can. The heat is coming back to Argentina. Looking at the forecast, there's still enough rain. We walked into January looking at heat and dryness in Argentina, and the crop was shot. It wasn't, but that's what everybody wanted to say.
Yeah,
We've gotten 4 weeks of normalized rains down there, so it's stabilized that crop. The crop is smaller than what we originally thought. So we're now roughly 50 million tons. It's probably closer to 48 or something like that. But it's not the failure that we had 2 and 3 and 4 years ago. It's,
Yeah.
we returned to kind of somewhat normal last year around 50 million tons. We're going to be somewhere in the neighborhood of 50 million tons in Argentina. But the elephant in the room, the 800-pound gorilla, however you want to say it, is going to be Brazil.
Yeah.
I just saw an article today. The Agriconsult down there had cut their production estimate because of drought in Brazil. That to me is a bullish headline. The problem with that is they cut from 172 million tons to 171 million tons. By far a record production. I
Yeah.
mean, we're talking, 18 18 million tons higher than their previous record. So yeah, there's going to be some yield drag, some production drag down there in Brazil, but it's still far and away a record production and the cheapest beans in the world right now. And
Yeah.
everybody likes to go to Brazil. I think they are responsible for 57% of the world exports for soybeans.
Yeah.
Whereas back, 20, 25 years ago, the US was responsible for 50 of it. Now
Hmm.
we're down to like 30, 33.
Yeah.
So yes, there are two weather markets. You've got the U.S. weather market in the summer, in August essentially, and then you've got the weather market right now. I think, with them harvesting, they have dried out a little bit. They've seen some of those areas that were getting too wet, so there would be some quality issues, but I think overall it's still a record production. And
Yeah.
that's where I'm not, like I said, I'm not ragingly bearish, but I'm also not like saying anything like I would be with the corn, where I said, yeah, there's upside here. There's potential. I think anytime you get a bounce in the beans, and nobody wants to hear it because they're still selling, at a loss. But I think anytime you get a bounce on the beans, you have to sell into it because
Yeah.
condition,
Yeah.
shrinkage. Yeah.
Yeah. I mean, Greg, I'm glad you said that because, I was thinking in my head, how do I ask the same question about the biggest risk in soybeans that I did with corn, apart from just growing them?
Yeah.
Because today, I'm looking at and this is a cash price in our area, looking at the cash price in our area, new crop beans being about 9.85. Basis on that, I think it's about 75 cents. That's quite a bit under break even.
Yeah.
So to your point, even though it may, even though you may be selling at a loss, if you're growing beans, I think you have to reward the market when it's rewarding the bean side of it. You got to sell into it.
Yeah, it was, and it was much, much worse a month and a half ago.
Yeah.
And these are those kinds of things where it's, well, I'm still losing money. Yeah, but we've gotten some back. And you can do the same thing that we were talking about in the corn, where you could re-own it on paper, go far enough out, give yourself some time to see some movement in that market. We're probably going to plant less beans. I mean, I think the writing's been on the wall. We talked about that
Yeah.
with the corn number. That'll help. But when your demand is struggling, and at this time of the year, we don't typically make a lot of sales for beans. So that old crop number is pretty well set in stone. There might be some changes, just minor here and there, to the crush side of things, but the exports are generally going to get a little bit smaller from this point. And we've missed the 5-year average 6 out of the last 7 weeks for export sales for beans. So we've already seen that shift to South America. So if
Yeah.
that's the case, crush is only going to do so much. We're exceeding what the crush goal is for the USDA, but it's not enough to say, oh, that's going to offset all the loss in the export side of things. And then back to tariffs.
Yeah.
How much
Well,
how much how much does that have to do with anything?
yeah, and so you bring up kind of what maybe my last point of this, and I guess maybe this rounds out and finishes our discussion on soybeans. But we had talked about selling into it, but one of the things I know is on the horizon is, the Trump administration is saying they're confident they can get a trade deal done similar to what we had as a, phase one trade deal.
Mhm.
We've got the story where acreage could shift more into corn. Let's just assume that big crop coming out of South America. I guess I would say, does it make sense to slowly price into these rallies, not to sell it all, but to slowly price, because there could be an opportunity where it gets us really close to break even. And so, where we were talking about, hey, reward the market, sell into the rallies, but let's be cautious doing into it to the point where there might be some bright spots that get us back to at least where we're not losing $70 an acre.
Yeah, I mean, this is the Trump administration. We saw this the first go around. We've seen it now in the first month of the second go around. Is we are very much headline driven.
Yeah.
So you look at a day like Wednesday, we were down 13, 14 cents, something like that. Yesterday we come in thinking, okay, there's going to be some follow through. Maybe as we go into option expiration for the March contracts, that we're gonna be putting 10.25 in our sights for March corn or March beans, and all of a sudden on Thursday we're up 13, 14 cents.
Yeah.
So you undid everything you did the day before, and all it took was a headline about the fact that at some point in the near future, no timetable given, Trump and Xi are going to sit down and talk about trade. That's all it took. We
Yeah.
bounced. And that's
Yep.
what, we go back to, I'm going to continue to bring it up because it's one of my favorite things is the first trade war, which, you talk about phase one. We saw a boatload of sales. Great. Problem is they didn't fulfill the whole thing. So they're still out there. They should fulfill that, finish that up and then add on to it. But regardless, the problem that we had when we were in the first trade war for that year and a half, whatever it was, we would see markets pop on any kind of headline that really said all it had to say was trade talks are going well.
Yeah.
Every fifth day, oh, why did we just jump 5 cents in the beans? Oh, there was a trade or there was a tweet from the USTR or there was a tweet from Mnuchin about trade talks going well. That's all it takes. That's all it takes to see these markets pop. So yeah, to roundabout answer your question, you don't have to you don't have to sweep the bins right now. You
Yeah.
can trickle it in, a couple of truckloads at a time. And oh, we gained another 5 cents. Okay, we lost 3 cents today, but we gained 7 cents the next day. Okay, let's
Yep.
sell a little more. And then, the way I always kind of approach my new crop hedging is I'll set a number and I'll say, okay, from this number, I'm comfortable with making sales. And I know they're losses, but I'll go every 10 cents for about 20 cents, 20, 30 cents. And
Yeah.
then I'll tighten that up and I'll go every 5 cents and I'll go every 2.5 cents as it goes up, because then you're bringing an average up as well.
Yep. No, I like that idea.
Yeah.
All right, so let's wrap up on soybeans. We got a few other topics I want to hit here before we close out. You and I were talking beforehand. Wheat. I mean, what's the story here? Talk about wheat.
The supply is getting tighter. Exports have improved over the last couple of weeks. You've got export demand out of Ukraine and Russia is dwindling a little bit. They've got some production issues. We've got some concerns about how we're going to come out of dormancy in the Great Plains, or even in the in the Western Corn Belt altogether.
Yep.
That gives us a reason to be just a little bit friendly. And if that, I don't want to set too high of expectations, because I legitimately I hate the wheat market. It's one of the most difficult markets to trade because you think you should see something happen and it doesn't. We think when the markets go through the roof when Russia invades Ukraine. We go to $12, $13, whatever it is. And that's the golden ticket. That is the absolute golden ticket. But within 6 months, We're back down to 7, 8, 6. We've even put fives in front of this thing.
Yeah.
It's it's not a market that necessarily will sustain, because every time we think that there's a problem in France, there's a problem in Germany, there's a problem in Ukraine or Russia, we think that's going to equate to more U.S. wheat demand. It hasn't. We're still like the second or third largest exporter of wheat, but we are not seeing that lion's share comes shifting over to us. And some of it is geographical, some of it's, logistical, because of where Russia sits, because of where Ukraine sits as the number one and number three exporters in the world, even with sanctions, even with embargoes, all that kind of stuff. That's why. So the wheat market doesn't necessarily have to make sense, but for right now, there are some friendly stories that are helping to push us off. We made contract lows in the old crop early last month or very late in December, and we've sustained a nice little uptrend here. It hasn't gone parabolic, which is great, because a lot of times you see those parabolic moves and it's
Yep.
like, well, this is going to be over in days. This is holding an uptrend. This is holding moving averages. So even when it backs off, like it backed off a little bit this week, it held support and is continuing to work its way back up.
Nice.
So it's a
Cool.
positive market. I don't like
Yeah.
it, but I'm happy it's doing what it's doing. I've got customers that have wheat that, as they say, this wheat has birthdays. It's been there that long.
Yeah. Yeah. All right. So let's shift gears. You'd sent something out this morning, I think, in your email, talked about some weather charts. I found some of that to be interesting. I know you had a couple different ones that maybe we can focus just on the March, April, May
Hmm.
segment, and when you're coming in here, obviously that's the segment we're running into, planting season, that kind of stuff. Talk a little bit about, what your charts are telling you for temp and precipitation real quick.
Yeah, temperature wise, nothing earth shattering. I mean, equal chances of normal to above normal to below normal across most of the Corn Belt. Now, the Eastern Belt going out to like maybe southeast Indiana, maybe into to excuse me, to Ohio, maybe a little bit on the warmer side, but we're not talking like massive heat. Some of that heat staying down in Texas, being above normal in Texas, Oklahoma, maybe Arkansas, but nothing that's really gonna shake anybody at this point. We watch it. We're obviously, when we talk about wheat, we're watching Kansas specifically. That's the biggest producer.
Yep.
Nothing right now that really gets us nervous there. The problem that you're going to run into, and the thing that you have to watch, is going to be the precipitation side of things. So. And this is why when we talk about wheat, sometimes we talk more in the spreads. You talk about what could happen with like the KC wheat versus the Chicago wheat.
Yep.
That wheat out in the Eastern Belt is going to see plentiful rain as we come out of dormancy. That springtime rain is probably at or above normal, and that's where, boy, we're coming out of dormancy. That's exactly what we're going to see. That's going to determine that crop. The other side of it, when you look at Kansas, even though their temperatures may not be anything to deal with, that dryness coming out of dormancy for them could be a real issue. So we've had this time where we kill the wheat crop numerous times because of winter kill, blah blah blah, whatever. Too much, it's wide open spaces down in Kansas if they don't have snow cover, blah blah blah. But them coming out of dormancy, determining that crop, and seeing it be dry, or at least a drier bias, is where you can put a little bit of a premium to that Kansas City crop, rather than looking at, say, the Chicago, which is the more heavily traded of the markets.
Gotcha. So temps, Corn Belt seemed to be somewhat neutral, right?
Mhm. Yep.
Talk a little bit real quick about the precipitation chart that you sent out and what it means for different areas of the states here.
So Illinois, most of Missouri, eastern Iowa, Wisconsin. Essentially, let's look at the Mississippi River and to the east. No
Yep.
problem. no issues. You might have some areas that are a little bit too wet. It could push back some of our planting progress, but overall, nothing. We're not worried about that. We should start to hopefully catch up because we're dry. I mean,
Yeah.
we got a few good rains here and there as we were going into winter, but nothing that really fixed us. The Western Belt is where, for the most part, Iowa, the Dakotas, Minnesota are equal chances of above normal, normal to below normal type rains, and so yeah, they'll probably get a little bit here and there, but we'll want to see if they start to get that as they go into June. Um, it'll be Nebraska, but depending on where you're at in Nebraska, most of those guys have ready-made water if they need it. So being dry in the spring is not going to be an issue. It's really those southern states like Kansas, depending on how much corn they want to plant. The Dakotas are fairly dry right now, so they could use a shot, but it's not necessarily that they're going to get an abundance of rain just yet. Minnesota is still, was overdone last year in a lot of places. Doesn't
Yep.
look like they'll have any major issues this year as they get started.
Sounds good. Well, I think we're to the point maybe where it's time to wrap up. I'll give you the last word here, Greg. What do you got to say to leave all the AgView pitch listeners here?
I know everybody wants to see higher prices, and to a certain point, a certain degree, I think we will see some higher prices. But I have to caution you is what those higher prices we're not talking about 2020, well, the latter half of 2020, 21, and early 22 prices. We're talking about, maybe we're looking at similar to last year, $5-ish corn. Because if you're going to plant 94 million acres, you're dealing with the 2 billion carryout. On the bean side of things, there's really no change to last year. We're
Yeah.
going to struggle, and I hate saying this because obviously everybody wants to. I grew up in a farm family. Everyone wants to see higher prices, but I don't know without some sort of a production issue, a loss in yield, whatever it is, even with lower acres, I don't know that we can look at that market and say we're going to get back to break even or better or profitable. And that's the tough part about it, because even if we cut 3 million acres of beans, we're still talking essentially 365 million in carryout, and upside maybe 1150. So it's one of those things that, if you use the U of I's numbers, their cash break even for beans is 1105. I've talked to producers where it's closer to 1185 to
Yeah.
1215. So if I'm looking at 1150 on the board, I don't have a good answer to that one. That one's
Yeah.
like, well, let's protect what we can, but I've said it numerous times. We get to this point every few years where it's one of those things where I wish we could just cut half the acres in beans or corn and say, let's let the price catch up, and then we can come back and plant in a year or two.
Yeah. Yeah.
It doesn't work like that, but
No, unfortunately, it doesn't. So, well, hey, thanks a lot for being on. We really appreciate your insight and all that you brought in here today. I thought it was a really good conversation.
thanks, Jeremy. I appreciate it.
All right. And then for all the listeners, if we're still, some of you might still be going through the ag renewal season with your bank. If you do need our financing toolbox, make sure you reach out to me. My email address is jeremy@agviewsolutions, and I'll email you a copy of the information that we put together to help you have a better conversation with your lender. So with that, I'll let you all go. And as Chris Barron says, until next time on the AgView Pitch.